Can you explain real-time execution of options? I understand trading the premium, but when would you execute put options? Travis, I think the word you mean to use is exercise, not execute. I think that's what you mean by this question. Because you said, can you explain the real-time execution of options? I understand trading the premium, but when would you execute put options? I think you're saying, when would you exercise put options? You would want to exercise put options. You understand what a put option gives you the right to do. It gives you the right to sell shares at a particular price at a particular date. So if you bought, let's say, for example, April 22nd expiration, $320 strike put options on Netflix today, and you still own them, on April 22nd, when the market closes, that option is going to expire. Now, obviously, it will expire in the money. If the option expires in the money, which means the stock is below the strike price of your put option, that's in the money. If it's below the strike of a put option, or if it's above the strike of a call option, that's in the money. Above the strike of a call option, in the money. Below the strike of a put option, in the money. So what that contract gives you the right to do is sell shares at $320 a share. For every one contract that you own, it's worth 100 shares. So if you held one put option, April 22nd expiration, $320 strike put, that gives you the right to sell. If it's one contract, that gives you the right to sell 100 shares at $320 after market close on April 22nd, which means on April 23rd, or the next, if that's a Friday, the next market day, when the market's open, you will be short 100 shares of Netflix from $320. You will be short the stock. Now, you have to have the actual capital in your trading account to short Netflix at $320. If you only have $1,000 in your trading account, or $5,000 in your trading account, you are not going to be able to short Netflix at $320. So your broker, it's going to be a whole big mess with your broker. Your broker is going to try to execute the trade for you. You're not going to have the capital. You'll get margin call. It's going to be a whole mess. But you would exercise the put option if you want to be short the stock. Maybe you saw the earnings today and you think, well, my option expires on the 22nd, but maybe you think Netflix is going to go down for the next 2 months. Maybe you think Netflix is going to go down to $200. It just might take a month to do so. Well, if that's the case, instead of you being forced out of the option trade by the 22nd, by having to sell the option, you can short the stock at 320, exercise the option, and hold that short position for as long as you'd like. That's when you would want to exercise put options.